CA Firoz. Today we are going to discuss regarding UAE corporate tax for free zone persons. Here we will understand the applicability of UAE corporate tax for free zone person and other things we will cover here like qualifying income, non-qualifying income and some compliance regarding free zone persons. In first slide, here we will understand regarding what is the free zone. Free zone is defined as designated or defined area as specified by UAE Ministry. And regarding tax rate, if you are a free zone person, you need to understand you have to pay 0% on qualifying income and 9% on non-qualifying income. You have to pay tax. Further, you need to understand if you are qualify for free zone person, you have to pay full 9% on non-qualifying income. There is no benefit you can take like 375,000 as basic threshold for normal corporate tax purpose. Further, here we will understand who is the free zone person. Free zone person is a judicial person as registered in free zone. Here includes branches of foreign or UAE entities, but that should be registered in free zone. Means branches must be registered in free zone, then they can consider as free zone person. Here exclude natural person and unincorporated partnerships. Further, we need to understand condition to qualify as qualifying free zone person. There is a condition which disclose if you are following, then you are considering as qualifying free zone person. If you are not following any condition of here, you will disqualify for qualifying free zone person. First condition is here, you need to maintain adequate substance in free zone. And second, you need to drive qualifying income and other thing, other part is related with the compliance. You need to comply arm length price regarding a related person and following the transfer pricing rule. And further, you need to maintain transfer pricing document. And thereafter, you have to maintain audited FS and you do not choose, you cannot select subject to standard rate. So this is condition we will explain here means not elected subject to standard corporate tax means if you are there is a two option for the free zone person they can select the qualifying free zone person or they can select normal taxable person. If you are selecting normal tax person, then you are disqualified for qualifying free zone person. So you need to understand this point. Thereafter, your qualifying means non-qualifying income not exceed lower of 85 million or 5% of total revenue. If you are following these conditions, then you will be qualified for qualifying free zone person and you can get the benefit of qualifying free zone persons. If you are failed to following any of condition, then there is a consequences. We will cover in next slide. Here, if you are failing any condition which I disclosed in earlier slide, then you have to pay 9% tax rate as standard rate for the 5 year. Means there is consequences which is applicable for the 5 year. Then after you can again recognize whether you are qualifying free zone person or not. After understanding all things, here we will understand qualifying and non-qualifying income. Because qualifying income is zero rated tax and non-qualifying income is subject to 9% tax rate. Here qualifying income includes transaction with other free zone persons and specific qualifying activities and de-minimize condition met. De-minimize condition means whatever we consider means other income, your other income will not should not be exceed 5% of total revenue or 5 million AED. That is the diminished condition. That is also cover qualifying income, then there is a charges only 0% tax rate on that. And non-qualifying income in non-qualifying income includes income from foreign or domestic permanent establishment, and also include immovable property income, and excluded activities income, which specify in FTA guidelines. For FTA guidelines, we will provide the link here, then you can go through on that. Here is a small star on immovable property, means you need to understand immovable property if that is commercial property and located in free zone, and the income arises from the free zone person, then that income will be considered as a qualifying income. Other than that, immovable property income is cover here non-qualifying income. Here we will discuss here taxation and compliance requirement. If you are a free zone person and you are following all the condition as like qualifying free zone person, you need to understand, you need to follow corporate tax filing, means the corporate tax return you need to file within 9 months from the relevant tax period, and you have to maintain audited FS. And regarding record keeping, you have to maintain your record for 7 years from the end of relevant tax period. And regarding transfer pricing, you have to follow the transfer pricing rule and arm length price, and also you have to maintain relevant document whatever is required for transfer pricing. Finally, I will conclude here some key points. One of the key points is qualifying free zone benefits, means you need to understand if you are following all the condition of qualifying free zone person, there is a benefit zero tax on qualifying income, but you have to comply some condition and some regulatory laws, like you have to maintain financial audit, tax filing in time, transfer pricing document. Further, if you are disqualified for qualifying free zone, then you have to pay normal standard tax rate 9% for the 5 year, considering current tax period. Thank you for watching my video. If you like my video, please comment here. Thank you very much.